Welcome to The Real Deal, where it's all about real estate and related businesses in central Massachusetts and northeastern Connecticut. And now, your host, Anthony Chabot of Chabot and Associates.
Hey everybody, and welcome to the Real Deal Real Estate Podcast. My name is Anthony Chabot from Chabot and Associates Real Estate Group of EXP. And on today's show, we have a very special guest that I'm excited about. His name is Jason Verraneault, and he's from NorthStar Home Loans. Welcome to the show, Jason.
Hey, thanks for having me, Tony.
So we've been talking about this for a while, and here we are finally sitting down at the offices. You have an office here in downtown Putnam. I have an office here in downtown Putnam now, so this is kind of like the first episode that I've really talked about that with my new location here. But you have some news about your location in Putnam also.
Yeah, we're located at 112 Main Street in the Montgomery Ward building. It's Unit 11 down on the bottom floor. We had a small space there for the last year and have recently expanded into the space next to us. So over doubling the space we have down there. We're pretty excited about that.
So you have the whole side of the building now, which is great. So from one corner all the way wrapping around that corner, you got a lot of window space with the traffic going by. You can put some stuff in the window to promote yourself over there. We were talking about that the other day. I do the leasing in that building. And so anyway, I do real estate in northeastern Connecticut. You do loans in northeast Connecticut. And what other areas do you do loans?
We're licensed in all of Connecticut, Massachusetts, and Rhode Island, so the tri-state area.
The trifecta going on, huh? Yeah, nice. I'm only in Connecticut and Massachusetts. I've been really just dragging my feet, submitting the paperwork for the license in Rhode Island for a while. I've just been so busy doing this stuff around here, but I really need to pull the trigger because I recently stumbled upon some stuff that I need to list out there, hopefully in about a month or so. But anyway, let's talk about you and what you've done in your career and opening your business and some of the things that you've learned in the time that you've had your business and where you grew up, where you went to school, and then how you got into your career and all those things that we're going to talk about. So some of the programs that you have available and maybe some of the specifications of those programs and what the differences are between them, the down payments that are required, maybe the credit scores that are required, how long it would take for one of those programs to close or packages. What do you call them?
Just call them loan scenarios, loan packages, just a loan to get to closing. So
sometimes it's 45 days and sometimes it's 60 with commercial. Is it like that with residential at all, where sometimes it's 60?
Not generally that long. There are a few programs on the lower credit side. Those lenders, really due to COVID, have fallen behind. But your traditional, conventional, higher credit FHA government loans are generally 30 days or less. So pretty quick and easy.
All right, so let's get started with your phone number, your email address, and your web address, and then how people can apply. We'll cut right to the chase and get right to that information right away.
All right, so phone number is 860-377-2341. That's my cell phone directly. I have it on me at all times. I say if I'm awake, I'm working, so call, text anytime. Our website is nstarhomeloans.com. And on there, there's an apply now feature as well. We also have kind of mobile app type feature where you can apply right online. If any time of day or night, 24/7, the application is open. We're, like I said, at 112 Main Street, right here in Putnam, Unit 11, Montgomery Ward. Also, obviously, on Facebook like everybody else.
So we are literally walking distance from each other, which is really nice. We have Victoria Station Cafe right in the middle of our offices, which is great because if you want to meet up with a client, you can just either meet up at your office or if you want to go take lunch and have a coffee or something, grab a sandwich, you can. Tons of restaurants in downtown Putnam that you can take advantage of. And then we have First Fridays events in downtown Putnam here. The location is pretty good. We have a nice spot to do business down here in downtown Putnam. So anyway, let's get into your history. Where did you grow up? Where did you go to school? And tell us a little bit about your background.
All right, so I grew up in Killingly, Connecticut, obviously next town over. Lived there most of my life. Went to Killingly High School, then went to Nichols College in Eastern Connecticut. From there, ended up having a conversation with a gentleman about getting into the mortgage business. Really had no idea anything about mortgages. The only thing I knew was when you play Monopoly, you could flip the card over and get money for that property. So that's about the extent of my mortgage knowledge in my younger day. And from there, I worked, that was back in 2002. So I think this year, we're approaching the 20-year mark, which is pretty crazy.
Wow.
Makes you feel kind of old.
Yeah.
But I worked for it was a national lender, call center type environment. We did a lot of great things there. So I've been through that lending model. In 2018, we kind of transitioned out of a program. We were doing a foreclosure bailout program, helping people that were behind in their payments and helping them get, right side up on their mortgage, helping get some equity and save some money. It was very rewarding. It was great while it lasted, and then the program went away just because there was really not a demand for it anymore, and the FHA got rid of it. So it came time to get back to traditional lending, and we decided to, kind of go our separate ways. And for me, it was to decide whether I wanted to go with another retail lender / bank or open up my own mortgage brokerage. I talked to a lot of different people. There were a lot of people, obviously, I've been doing this a long time, that would help me open a branch and recruit loan officers. But the mortgage broker model really spoke to me, and it seemed like that was the best way to go as far as flexibility for me. And I felt it was really the best deal for our consumers and our clients. So we opened NorthStar in July of 2018 and got licensed in September of 2018. And it's been fantastic. I wouldn't change anything as far as going into this broker model.
Well, you definitely are a pleasure to work with. We just recently had a deal that we worked on together, and it was a really challenging one. And as many times as I called you for status updates, you were always patient. And as many hoops as we had to jump through to get the job done, you just stood by us, and you were willing to go to fight for the client. And it was really, I was very impressed with your diligence and persistence to get the job done. And it's all done. It's all good. Closed. Everybody's happy, and you came out winners. So thank you very much for that. I worked with a lot of lenders in northeastern Connecticut, and Jason is definitely one of my favorite lenders to work with. So kudos to you, and nice job on that last one. Hopefully we'll have many more in the future. Sure. So let's talk about what was it? I think we missed the part about where you went to school. You grew up and you went to school. We already went through that. But how did you come into being a loan officer? Like, what brought you into that career?
I was really just kind of bartendering, waiting tables, looking to get into business management. Wasn't really sure what field exactly. And someone just asked me, said, hey, they were recruiting for a mortgage company and asked me to come in and interview. And like I said, I didn't know anything about the business. So I went in, I interviewed, and I said, you know what, I'll give this a shot and see how it goes. And I really enjoyed learning the different programs that are out there, how to navigate through underwriting guidelines. It's definitely an interesting business. There's so many different facets to it that people don't even understand. Mm-hmm. So I really got to learn the processing end of it, the underwriting end of it, the closing and post-closing end of it. And honestly, was really successful at it. So it was very rewarding. You help people save a ton of money on a refinance or help them get into that dream home, which is, as you know, it's just an awesome experience to help people with that. So just kind of stuck from there, and I said, hey, I guess this is the right field for me, and I've been doing it ever since.
So is there any significance to the name NorthStar, or where did you come up with that name? What made you think of that?
Not a real significance. It was more of a family group text saying, hey, we decided to open our own company. What do you guys think for a name? And we just started texting back and forth different names. My father-in-law came up with NorthStar. He lives up in New Hampshire. My wife, Lindsay, loves stars. And he threw out NorthStar, and I was like, you know what? Yep, that's the one right there. So, everyone talks about it a lot, find your true north, follow the North Star, and, it's kind of what we did to get here, so it all kind of made sense.
Okay, I was always curious about that because, I always wonder, like, my old business was E-Wave Media, and there's, like, a story to that a little bit. I wouldn't get into it, but, Chabot and Associates, I wonder what the story is behind that one, right? But anyway, so, all right, so we went over your past, where you went to school, where'd you grow up, how'd you get into your career, the background of your business, the name, the logo, all that stuff. And now let's talk about some of the programs that you have. There's one in particular that I'm going to kind of tease some people on. I think we should probably get into that one last because I've been through all of the different programs with a number of lenders or loan officers in the area. But the one that we're about to talk about, which is a multifamily or flipper, actually, right? Is it flipper?
Fix or flip, yeah.
Fix or flip program. That one, I haven't had a conversation with anybody on the podcast about a program like that before. So I'm pretty excited to learn about that one. But let's go over the basics. So when a realtor has a client and they say, who do you have for local loan officers or local mortgage companies? We always provide at least 3. And then we kind of talk a little bit about each one of them, and maybe some of the things that separate them from everybody else, the things that we like about them. What are some things that we should be telling the buyers about you?
So for us, the broker model to me is really one of the separators, assuming, we feel that we have superior customer service, but everyone's going to kind of feel that same way, that they have the best service. As far as interest rates, you're going to get wholesale rates with a mortgage broker. We have access to, all the different programs where a lot of lenders are restricted either due to credit score or they just don't offer the program in general. The other thing is we do one credit pull, but we shop multiple lenders. We're basically your mortgage concierge, right? So you come to us, we find the best program that fits your needs. We pull your credit one time, and we shop it with 20, 30 different lenders that we feel will give you, number one, the best rate, but number two, the quickest turn time, number three, the best service. So we're kind of a one-stop shop. We have the program to fit your needs. If that program is out there, we'll definitely find it, and we're one of the only ones that will have access to all of that.
Okay, great. Let's go through some of the different programs that are out there that you hear all the time, and I'll just rattle some off the top of my head, and you can tell me which ones I missed, but I always hear FHA, USDA, conventional, and I'm trying to think, 203K, and then a home style renovation loan. Those are the 5 I think that I hear on a regular basis. Can you tell us about any of those, like a brief overview?
Sure. VA is also very popular for your veterans.
Right, yeah,
yep.
VA,
So. Yeah, so really when someone comes to us, we want to look at what their credit is and what they have for down payment, right? So those are kind of the top things. One of the myths is if you want a conventional loan, you need 20% down. That's a myth that you can get rid of. I actually had that conversation today with a customer. You can actually do a conventional loan with 3% down. So it's a lower down payment than FHA. They all have their different benefits in downside. So conventional, obviously most common, you need better credit. That's the highest credit customer would go with a conventional. 3% down, you have lower mortgage insurance. Anytime you don't put 20% down, you're going to have to pay mortgage insurance to the lender. FHA is kind of your good credit down to low credit, where you can do 3.5% down. USDA, in my mind, is probably the best first-time buyer program in this area because every single family home in Windham County is eligible for the USDA 100% financing program. That comes with low mortgage insurance and no money down. It's really tough to beat if you're a first-time buyer or don't have a ton of money to put down. And the other myth there is you have to be a first-time home buyer for that. You don't have to. You just can't own any other real estate. So if you're selling your house and want to get a new one, you can do that with USDA as well.
Very interesting. Okay, so there's one thing that I always try to remember and I can't, and this is hopefully I'll remember this time. What do I have to do to get no PMI? What are my options to avoid the PMI completely?
Serve your country and be a veteran. VA loans don't have mortgage insurance, so that's one.
I always hear that's one of the best programs.
If you're a veteran, then yes, VA is probably the best because there is no mortgage insurance at all. You do have to pay an upfront fee to the VA. If you're not exempt, if you're disabled, a lot of times you can be exempt from that fee as well, but there's no mortgage insurance.
And can you actually, I don't know if we went over what PMI is, but like a brief description of what that is?
Yeah, so PMI is private mortgage insurance. That's for conventional loans. The private companies that hold those. If you're getting a government loan, FHA or USDA or even VA, they have upfront insurance premiums, and then they all have monthly insurance premiums as well, with the exception of VA, obviously. And what that is they consider it a higher risk if you're not putting 20% down. So the PMI or the mortgage insurance does not help the customer really at all. It just, the benefit to the customer is that the lender is willing to lend them more money than they would without 20% down. And the insurance really covers the lender's losses in case, because it's a riskier loan, if you're not putting 20% down is what they consider it. So it really just covers their risk. So it's for their benefit, but it also gives you the benefit of putting less money down.
That's an interesting way to look at it. I never really considered it like that before. So actually, it allows you to have access to lending to get a loan without paying 20%. So you're paying a premium for that.
Exactly.
And then, so which one is it that VA is one, and then how else can you avoid the PMI?
So you can do what they call lender paid PMI, and really what that is you just take a higher interest rate, and you won't pay mortgage insurance, but you'll pay a higher interest rate. The lender's basically financing in your mortgage insurance. Actually just had a client who came to me. He was a friend of ours, and he's buying a house, and he said, I was going to call you, but I got signed up with this bank, and they offered me this great program with no mortgage insurance. And I said, okay, well, tell me a little bit more about it. And he said, yeah, they're giving me, I think he was paying 3.3 or 3.5%, but there was no mortgage insurance on it. And it was, a $500,000 purchase. I said, let me do a comparison for you. So he was thinking that his mortgage insurance was going to be somewhere around $250 a month. So we ended up writing a loan for him. He's closing on the 2nd of November. He's clear to close now. We ended up getting him under 3% with mortgage insurance in there, but his mortgage insurance was only $90-some odd a month.
That's not bad.
So if you were to take our rate with the mortgage insurance, he's probably paying around 3.125 if you took that payment. So he's paying a lower overall monthly amount than he would have with the bank with no mortgage insurance.
Oh, I see, yeah.
But what I told him is the benefit is if you finance in your mortgage insurance, if you do the lender paid, you're stuck with that rate and payment. Right? So he would have been stuck at 3.5%. Now he's below 3%. And when he does get to that 80% equity mark, he can get that mortgage insurance dropped off of his payment. So take advantage of the low rate. Yeah. It doesn't really make a lot of sense. I think I've done one in my career where it actually made sense to do it, and it was more of we had to get him to qualify issue. So it doesn't really make sense to finance in your mortgage insurance because you'll never be able to get rid of that, especially in a low rate environment like now. We'll probably never see these rates again. So it doesn't make sense to roll in your mortgage insurance because you'll never be able to get rid of it.
Well, that was the other thing I was kind of getting at, and actually, thanks for reminding me about that. There are certain programs that you can never get rid of the PMI. Right? Am I right?
Yeah. So USDA, it's for the life of the loan, but it's only 0.35% of the loan. So, when you look at the blended payment, if you took in the rate and the mortgage insurance, is generally still a pretty good deal for you. FHA, if you don't put down 10%, that mortgage insurance is for the life of the FHA loan as well. If you put down 10% with an FHA loan, the mortgage insurance is for 11 years, regardless of your equity position. And then conventional, once you get to the 80% mark, you can request to get it removed.
It's funny. I don't think I've ever seen anybody put more than 3.5% down on FHA. Yeah. But you can. I never even thought of it as a possibility because I'd never see it. It's always 3.5. Yeah.
Well, you can do it, and when we mostly see it, it's if you're below a 580 credit score, you have to put down 10% with FHA. So that's where we've seen it most. But not a lot of people lend on credit scores below 580, so you probably don't see that often.
Which is something I wanted to bring up. That one that we went to bat on, and I kept calling you, that was a tough one to get done, but you got it done. They're not all like that. A lot of times, they've been really easy ones too in the past. So, and hopefully we'll have a lot more of those.
Yeah. The easy ones are always good, but you know what? The low credit ones that take a little bit more work and fight, it's definitely rewarding to help those people because a lot of them don't think they can get a loan with low credit, and you can make it happen for them. It's pretty special.
So let's talk about what types of things, how quick can somebody get a pre-approval letter? So I'll start out with the whole process. Normally, if somebody comes to me and they want to buy a house, I say, are you pre-approved? And they say, no, but we're pretty sure that we're going to be okay. And I tell them, well, in order for us to go out and look at houses, the other agents are going to probably ask us if you have a pre-approval letter because they're not going to want to show a house unless you have a pre-approval letter. In general, it's not good to do that as a practice. So I say, call one of these people, get a pre-approval letter, and I usually tell them you can probably get it in maybe an hour or something like that. They can potentially email something over to you just based on verbal information. Is that generally true? Is that a fair statement, or what do you think?
Yeah, I would say it's generally true, but it's unfortunately generally true.
Okay.
All right, if you're getting a pre-approval, if you give, number one, you have to have your credit ran, right? So we need to make sure your credit is where it needs to be. We won't issue a pre-approval letter unless we verify income and assets. because there's a lot of times where people don't really understand how much they make, or if someone has variable hours, they say they work 40 hours a week, but some weeks are 40, some weeks are 37, some weeks are 35. That's going to look different to an underwriter other than if you work just 40 hours. So it's important to get that. Maybe you have a garnishment, something that comes out of your paycheck that you forgot about for an old loan or child support or something like that. So it's really important to get your documents evaluated before you get pre-approved. If you're getting a pre-approval letter without submitting any documentation, you're not really pre-approved. So yes, it can happen in an hour if you have those documents readily available. Mm-hmm. It probably takes us maybe 10 minutes in most cases to run through the credit, evaluate that verbal information that you talked about. Mm-hmm. So technically you could issue a letter at that point, but we really like to gather all of the documents to make sure that you're really qualified. And obviously, it protects you as a customer. You don't want to get overly excited about buying a house if you're not really qualified. You don't want, you as a real estate agent going out there and, taking up your time in nights and weekends for someone that's not really qualified. And you really don't want the customer to go out there and really fall in love with a house that they're not qualified for. Especially, on a conventional loan, some of the FHA, USDA, if it's on the borderline, you have to run it through one of the automated underwriting systems that Fannie Mae or Freddie Mac or the government have. Because you need those approvals through those systems as well. I had one last night. I got a text late last night from an agent and said that she was going to show a property. The other lender told the customer that she was qualified for a conventional loan because the condo complex was not FHA approved. She went to look at the condo. She fell in love with it and she wanted to put in an offer. And they went back to the lender to get the pre-approval letter for conventional, and the lender said that they made a mistake and they weren't qualified for conventional because she never ran it through the automated system. So there's steps that have to happen. A lot of people want it done quickly, and it can happen quickly, but you want to make sure it's done right. So you can definitely have one in a couple hours if you have your documents readily available.
So what documents are required right up front? You have to have like bam, 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 got to have a few things ready to go, right?
Yeah, so really pay stubs, W-2s, bank statements. That's really the best things that you should have when you're looking to get pre-approved.
Driver's license?
Yeah, we'll get that. Like, we'll send a list out to get the driver's license or sometimes tax returns, but we wouldn't hold up a pre-approval for that. Mm-hmm. We just really want to see what the current income is, that they have the money in the bank, or at least a path to the assets. Some people don't have it right now and say, hey, my dad's going to give me $10,000 as a gift. That's fantastic. We'll do a pre-approval with that. But really you want to make sure the income is as it was presented.
Okay. So they get that pre-approval, and then they can go and look at houses. And then they go look at a bunch of houses, and they find a house that they like, and they tell me that they want to submit an offer on it. So we write up the offer, get the deposit check, submit it to the listing agent, and then the listing agent says, in this market, we have multiple offers, so best and final. And then I go back to the buyer and say, best and final, you guys, is that as high as you're comfortable going because it's a competitive market? And they say either yes, or they say, we'll go up a little bit more. So then they submit their best and final, and then usually the next day by 5 p.m., the listing agent gets back to me and lets me know if we got it or if we didn't. And at that point, if we got it, then we schedule the inspection, and we have a certain amount of days to get the inspection done and a certain amount of days to come to an agreement on any repairs that are going to be required from that inspection. And then if we move forward after the inspection, then we order the appraisal. So how does the appraisal portion of it? So the home buyers, just so everybody knows that's listening, they don't have to pay for anything until it comes time to pay for the inspection. That's the first thing they have to pay for, and it can run anywhere between $400 and $800 typically for an inspection, from what I've seen, depending on what you want to have done. And then after the inspection, the next thing you have to pay for is the appraisal. How much are those typically going for? Any idea?
Yeah, $450 to $550 depending on the program. So conventional is a little cheaper than an FHA or government appraisal. There's a little more involved in those.
So after they get the appraisal done, that comes back, and then it's determined, if the house appraised at the purchase price, which I've seen recently, it does happen occasionally. The houses are not appraising at what the purchase price is because the prices were inflated because of the multiple offers and the lack of inventory on the market. And the low interest rates are allowing people to qualify for properties a lot higher than they would have before. So they're saying, my payment's going to be so low, I'll offer more and have no problem with that. And then the appraiser goes and says, sorry, the house isn't worth $410, it's only worth $374. And then the buyers say, that works out pretty good for me because then typically the seller has to come down on the price in order to, because they're not going to be able to get the loan for the house unless they're willing to come up with X amount of dollars cash, right, to cover the difference between the appraised value. And that can get complicated with that formula also. Am I right? Is that something that you've been seeing recently at all?
Yeah, I think you're seeing real estate appraisers kind of battle the real estate agents, right? The agents are getting these prices way over the list price. And I think you're seeing the appraisers try and kind of keep that down. They don't want to see a meltdown like they did in 2008. So it's definitely interesting. We're always happy to dispute the value if we see fit and the realtor sees fit. What we usually do is we'll get comparable sales if you feel like it was unjust, and we'll send those comparable sales into the appraiser to be disputed. And sometimes they'll change it, and sometimes they'll stand by their number.
So in my experience, I've only been doing this for 3 years, and although I've been in the industry for a long time, 3 years officially with my license, and I've only seen one situation where I had a listing and it didn't appraise, and what ended up happening was that the seller did come down on the price to the appraised value. I have one right now in Worcester, didn't appraise, and the seller is kind of not happy about it at all, and the listing price isn't even the appraised value isn't even the listing price. So she's not comfortable selling it for less than what she agreed to sell it for, which was the listing agreement. So say the appraisal came in at $15,000 less than the listing price. The buyer now has paid for the inspection, they paid for the appraisal, and then the appraisal came in $15,000 less than the listing price. The seller legally has no obligation to sell the house for less than what she agreed to sell it for on the listing agreement. So the buyer is just unfortunately out of luck. Am I right? What have you seen that happen before?
I've seen it happen. I haven't seen a seller pull it off the market, though. What I've seen, sometimes we'll dispute it. It makes the seller feel a little better. And then if it comes up or doesn't come up, usually they end up just settling on the appraised value, because 9 times out of 10, the next appraisal, if you try to go with somebody else, is going to come in at the same value. They're all based off comparable, recent sales. So,
right,
unless someone comes in with cash, they're most likely not going to get what they're thinking. So
it's kind of a tough situation because with the market the way it is, I've the last 4 properties that I sold basically sold for way over asking price on the first day on the market. So they just haven't. I have no inventory right now for residential, pretty much. It's and because it's all sold, because there's no inventory on the market. So as soon as something comes on the market, it's gone immediately. If it's even close to priced appropriately, this seller wanted to price her property higher than what I recommended. So I went along with it, and here we are. It didn't appraise. So I don't know what's going to happen in this situation, but I'm hoping that she's going to come down to at least the listing price, agree to that, and then the buyer will somehow be able to come up with the extra funds. So how do you see that happen where the buyers come up with the extra funds? Is that something that is allowed? I've never done it before, so I don't know.
Yeah, it's definitely allowed. I really haven't seen it in, I wouldn't recommend it either. Just why would you pay more than something's worth, especially it's kind of an inflated market as we're in already. So
maybe they really need a house and they love this house, and the market is so astronomical right now and the rates are so low that they say I'm going to be paying less than what I would have paid before, and I have this extra $15,000 laying around. Is that something that you would be okay with? Is that something that they could do it?
Yeah, from a lending perspective, that would be fine. So just say, for example, somebody's putting 10% down. That 10% is based on the lower of the appraised value or purchase price. So they would get their loan for 10% down, but then they would have to come up with the 10%, and then the additional money to bridge the gap between the value and the price. So then, that's perfectly acceptable from a lending perspective.
So if they have the money to do it, and they're willing to do it, and they're comfortable with it, and they understand that the ramifications are that hypothetically, if the market crashed and they overpaid for the property, then they wouldn't have actually the typical required amount of loan to value.
Right.
Can we talk about loan to value a little bit? A lot of people may not understand what that means, because it's kind of LTV is something people that aren't familiar with the business might not understand. Go into that a little bit if we could.
Yeah, lots of acronyms in the mortgage world and real estate world, but LTV, loan to value, is the percentage that the loan amount is of the value of the home. So if you had a $100,000 property and you're putting 20% down, you're borrowing $80,000, it would be a 80% loan to value, 80% LTV.
And what's the typical requirement for, FHA, USDA, VA, conventional? In your experience, is there a certain number that they have to meet in order to get the LTV to qualify that house for a loan?
Yep, so VA and USDA are 0%, 100% LTV, 0% down. FHA is 96.5% LTV, so 3.5% down. And your max conventional is 97% LTV with 3% down.
Okay, and now to get into the thing that I think we covered that stuff pretty good. And if you have any questions about those loan programs that we just talked about, we go into them in depth in previous episodes. But there's one that I would like to really get into now, which is what do you call it? This is the new one that we're talking about.
The fix and flip?
Yeah, the fix and flip. Everybody's talking about flipping properties because there's no inventory on the market, and you can get a property that's been let go for a long time. And if you have a lot of experience with construction, or if you have friends that have experience with construction, there's a possibility that you could make a pretty good amount of money doing a flip. So let's talk about that program.
Yeah, for sure. So there's a couple what they call rehab programs out there. So if it's something you want, low inventory, you wanted to buy something that's in disrepair and move into it, then you might have a 203K or a home style where you could finance in the repair money so that you can get into the house and live in it. The fix and flip is more for a investor type person that wants to find a property in disrepair, buy it, fix it up, flip it for a profit. It's more of a short-term loan for them, so no prepayment penalties. The fix and flip program we have available, there's no experience needed, which is pretty unique. You don't have to be an experienced flipper, so this can be your first time, and we can help you out.
Let me interject really quick. My right-hand man here, Jay Lorette, has to leave for an appointment, but while we're talking about fix and flips, we have an event coming up here at the new office at 75 Main Street, Suite 2 in downtown Putnam on November 4th at 5:30 p.m., and Jay actually has been bringing people out to take a look at flip opportunities. I want Jay to just take a minute to introduce himself and say hi to everybody.
Hey, thank you for having me.
So if you want to come and meet Jay Lorette, in downtown Putnam, 75 Main Street, Suite 2, right behind Bare Hands Brewing. Jay is an agent. He's licensed in Connecticut and Massachusetts. He's a real go-getter, super nice guy to work with. He's been at the office every day with me. We've been going around doing all kinds of crazy things and talking to all kinds of people all over the place. He's a super nice guy to work with, and Jay would love to work with you whether you're wholesaling, flipping, multifamily investment properties, residential or commercial. We do it all right here, and Jay is a super nice guy to work with. So I highly recommend that you give him a call and say hi to Jay. So thanks, Jay, for being on the show. Appreciate it, and I'll talk to you soon. I'm going to be interviewing Jay probably, hopefully tomorrow if we have time. We'll go over everything that we've done together and since we've known each other. So back into the fix and flip program. Can you tell us a little bit about this program? Because I know we just went over the basics of it, but you said, did you touch on the point that you don't need any experience in this?
Yeah, so you don't need any experience, and you can borrow not only some of the money to buy the property, but you can also borrow some of the renovation costs. Mm-hmm. So, instead of 20% down on a property and then you have to go in and add all the money for renovations, you can actually borrow, 80% LTV or put 20% down on the cost to buy and rehab the property. So you get some of your rehab money up front too. And then as you get more experienced, as you get to your second, third, fourth flip, they'll let you borrow even less or more money with less money down. So the more experienced you are, you get more leverage.
So say I find a property, and right now an average property that's been renovated and maybe 3 beds, 2 baths, Putnam, Killingly, Woodstock, Brooklyn, Thompson, Pomfret area, somewhere in northeastern Connecticut area that we are typically around. I'm thinking like $250 is a pretty good price for a property that's been fully renovated. That's in nice shape. It's got new floors, walls, ceilings, and then updated plumbing, electrical, heating, roof, siding, nice lot, in a decent location. I mean, $250 is actually a pretty good price right now for a property like that. $250 to $300 is probably more likely what you see. Every now and then, if you see a property that's under $250, it's probably going to have so many offers on it, it's going to be going the first day. Right. So if I find a property that's been let go and I have a lot of experience, we have some people that are going to be coming to this event that do flips on a regular basis. You can actually meet and greet with these people. And I think they're going to be really interested in this loan, because if you find a property and you can get it for, say, hypothetically, somewhere between $40,000 and $70,000, and then you have either friends or yourself are a contractor, a general contractor, but you have a lot of connections maybe. So you can get this property for, say, hypothetically, we'll just make it really simple, $50,000. And then you're going to put another $50,000 into it because it's in pretty good condition. It doesn't need like $100,000 worth of work to it, but maybe it needs $50,000 worth of work to it. Let's use that as a hypothetical scenario. So we come into it, I don't have any experience at all. I see a property, I know I can get it for about $50,000. I know it probably needs about $50,000 in renovations. How would that loan work, and what's the interest rate, and tell us a little bit more about that process.
Yeah, so you'd have to come up with 20% of the total. So you have $50,000 to buy, $50,000 to renovate. So you could borrow $80,000. So you're going to get your purchase price plus you're going to get about $30,000 to start the renovation. So you don't have to come out of pocket with that, which is kind of the nice piece to the program. Rates are a little high. Honestly, I haven't really checked them before COVID, but they were in the single digits, which is pretty good if you're talking. You usually get private money anyway.
Yeah.
So
this type of loan is typically what I've seen anyway, and I don't have a heck of a lot of experience in it, but what I always hear it referred to as hard money loans, and usually it's somewhere between 10 and 12%. And sometimes it's 2 to 4 points. So you're talking about a pretty high interest rate with a pretty substantial down payment, plus you're paying a premium to get access to this money. But the benefit is that you would never be able to get a USDA, FHA, VA loan on any of these properties. You probably, I don't even know if you could get a 203K or a home style renovation loan on these properties. Those are renovation loans. Do you think that you could get a 203K loan on a $50,000 property that needed $50,000 in renovations?
yeah, I mean, you could get it if you're going to live in it, but a lot of this program is meant for investors, people that are looking to fix and flip it. It's a short-term game for you, right? That's why you don't mind paying the higher interest. Usually it's interest only. So you're just kind of carrying that on your books for a couple months while you fix it up before you flip it. So
if you were planning on living in it, you actually could get a 203K loan on it, but the paperwork requirements on a 203K loan are pretty strict. You have to have a lot of paperwork from the contractor, and the contractor has to be pretty well versed on providing very specific paperwork for a 203K loan to run through the requirements of underwriting. Am I right with that? Or what's your experience with 203K?
Yeah, experience with 203Ks, it comes down to the contractor. There is paperwork. It's honestly, it's not a ton. It just has to be done properly. Okay. And a lot of contractors have a hard time with doing it properly. There's also different draw periods than they're used to. A lot of them are, usually getting a lot of the money up front. They get 8 draws over the project. 203K, usually you're not getting any money up front. You're going to front most of it and get 5 draws. So if you're going to go 2 or 3K, it's a great program. I did one. It was actually a home style that we completed where the guy tore down the entire property down to the foundation and rebuilt it.
Wow.
And as long as the contractor is on point, you're in good shape. It really comes down to them. So there's a couple of local contractors that work 2 or 3K, and it's worth it. So you just want to make sure you're using the right contractor.
So if I find a flip and I wanted to potentially live there, I can get a 203K instead of getting this fix or flip loan, and my interest rate would be a lot less. But if I already have a house and I don't want to move out of the house, I just want to move in, I just want to stay where I'm living, or maybe I want to have multiple flips going on at the same time, I have to do the fix and flip program, am I right?
Right, you have to do a fix and flip or go to a hard money, but fix and flip is the way to go if you're not going to live in it.
Okay. And then, so the goal of the fix and flip would be that you get the loan, and then how's that process work timeline-wise, months-wise? Like, say it takes you 6 months to do the flip, what happens at the end of the 6 months?
So you would sell the property and, pay off the loan. There's no prepayment penalties or anything like that. So it's meant to be a short-term thing. There's no penalties to pay it off early.
Great. Okay. And then you have multiple lenders that are willing to agree to this, or is it one particular lender? I'm just curious how that works.
Yeah, really, there's only 1 or 2 that will do this program. I mean, that's the nice thing about being a broker. You can offer the conventional 20% down with great rates, and you can go all the way down to a 500 credit score on FHA, or offer the fix and flip program. So there's so many options out there.
Very good. Well, I really wanted to do the video podcast version of this because we just got 3 cameras, got a couple microphones, a 4-camera monitor, a video switcher, and all of this new equipment here.
None of them work.
Unfortunately, I didn't have time to work through the details. 2 of the cameras are working, one of them's not, so I got to fiddle through that stuff. But hopefully we'll be able to come back around in maybe 6 months or a year or something like that and have Jason back on, and we can go through this whole process again. We'll share the laptop screen, show how you can apply online. Do you guys have the ability for people to apply online? And is it easier to do it online, or would you recommend they call in person or show up in person? What do you think?
It doesn't matter to us, personal preference. A lot of people do prefer it online. We have it, you can do it right on your phone, you can do it right on your computer. It probably takes 5 minutes to fill it out online. You have the ability to upload your documents to the secure portal, so you don't have to email them, you don't have to fax or scan them, or you can walk in and we can do it in person. So really flexible, however anyone wants to apply.
So if you wanted to walk into your office, you pull into downtown Putnam, you go to the Montgomery Ward building, which is right across from Antiques Marketplace, diagonally across from Victoria Station Cafe, find a place to park, which can be a little bit of a challenge in downtown Putnam at times, but usually during the week it's not too bad. So you pull in, you walk into the Montgomery Ward building, and if you walk in by Sawmill Pottery, it's on that floor right there, right by the Sawmill Pottery sign. Or if you walk in by Skeeter's Toy Box, you have to go down the stairs. But you're welcome to go in there and meet Jason in person. He's a great guy. Meet him at Victoria Station Cafe and have a coffee. And then after you guys are done having your meeting, you can come over to my office and have a cappuccino and play a game of foosball.
That's right.
And if it's after hours, you can have a beer.
That's right.
So, all right. Well, thank you so much for being on a podcast, Jason. It's always a pleasure hanging out with you and having fun. And real estate is such a great business to be involved in because we just have so much fun with it.
It is.
So we'll see you at the KBA meetings and the PBA meetings and the Chamber of Commerce events.
Oh, yeah.
And, who knows when the next time we're going to see each other is, but I'm sure it won't be more than a few days.
I'm sure.
So one more time for the contact information, phone number, email address, web address, one more time.
Yep, phone number 860-377-2341. Email is jasonv@nstarhomeloans.com. Website is nstarhomeloans.com, and you can find us on Facebook.
Before we go, I always like to ask a couple questions to round everything out. And one of the questions is, if you have any advice that you could give to somebody that's just starting out in the business that you wish you would have known when you first started, or anything that you can think of over the years that your business just skyrocketed. I always look for those little tips of things, those little words of wisdom for people that have been in the business for a long time.
Yeah, so as far as things that I've learned is this business, real estate, mortgage business, there's so much to it. It's so complex, so many moving parts. I mean, I've been doing this for almost 20 years, and I still learn stuff every week. Something new comes up. So, don't get frustrated that you can't learn it all. You can't read it all in a book. You can't sit with somebody and learn it all. You have to learn as you go. So don't be afraid to go out there and fail or mess up, because it's going to happen. And quite frankly, that's the only way to learn in this business. And then as far as helping your business grow, it's really just, working for your customers. And I think that goes for any business, customer service related, mortgages, real estate, anything. Pick up your phone, be available, be accessible to your people, and be transparent. We talked about that loan that took a while, and it was a struggle. There was 2 sides of it. The conventional one was quick and easy. We're sitting there clear to close, and the low credit FHA one was taking a little bit more elbow grease and a couple of fights. But at the end of the day, you just have to be upfront and honest with people and answer the questions. The biggest thing in this business is people don't pick up their phone and they avoid problems. They don't talk about the problems. So everyone's wondering what's going on, thinking something's wrong. So just be open, be upfront, answer the questions, be honest, and tell people how it is. And sometimes they don't like it, but it's way better than making up a story or not answering your phone. So, just communicate. Communication, I think, is key, especially in this business, because we're all working together for the same goal, to get that buyer into the house, to get the seller to sell their house. So we're a team, whether you're the buyer, seller, seller's agent, buyer's agent, mortgage guy. We're one team trying to get these people over the finish line into their new home or out of their house. So, just be upfront and have those conversations.
That's a great point, and I try to remind people of that all the time, that a lot of times we'll deal with difficult clients or buyers or sellers, or sometimes people in between that we're working with, and a lot of times we have the opportunities to make it easy for each other to work together and have a great experience as real estate agents and loan officers. If we're working together all the time, we might as well make it easy on each other and just try to get along and just be polite and courteous and honest and helpful throughout the whole process. So I agree with that 100%. And thank you so much for all the things that you do for the community in Northeastern Connecticut. I know you're a huge part. You're always at WINY Radio, representing the KBA, and at all the events, participating, doing the candy for the kids, and representing for the trinket shop and going out there and showing up to all these things. So thank you so much for all you do for the community, and I'll see you very soon. Thank you so much, everybody, for listening to the Real Deal Real Estate Podcast. My name is Anthony Chabot from Chabot & Associates Real Estate Group of EXP. And if you are listening to this podcast and it's before November 4th, 2020, make sure you go to the website and check out on Facebook, actually. If you go to Chabot & Associates on Facebook, you can find the events that are coming up. We have a Flipper event that's coming up on November 4th at 5:30 p.m. and hopefully Jason will be able to make it to that event, and he can tell you more about that fix and flip program that he has available. It's a wholesaling, flipping, and multifamily investment property event. We're going to have a lot of people here from all over. We have a guest speaker. His name is Gualter Amarello. He owns $5 million worth of multifamily investment property. He's, I'm guessing, 36 years old or so. He's done a lot in his short time on this planet, and I think we can all benefit from learning something from Gualter. He's a really nice guy to work with. He's a real estate mentor and a real go-getter. Super nice guy to work with. He flips, he does wholesaling, and he does multifamily investment properties. And I think anybody that's into any of those things outside of the conventional world of real estate would benefit from coming to that meeting and rubbing elbows at 6 feet away during COVID and meet and greet everybody in the Northeastern Connecticut area. And we're going to be pulling some people from Central Massachusetts and Boston and New Bedford and Fall River. So if you have that type of mindset, we hope that you can make it to the event. 75 Main Street, Suite 2, right next to Bare Hands Brewing, right next to 85 Main Restaurant, and it starts at 5:30 p.m. If you have any questions, give me a call, 508-847-0902. And you can check it out online at chabotandassociates.com. Thank you so much, everybody, for listening to the podcast, and I thank Jason Verraneault from NorthStar Home Loans for being on the show. See you guys next time. Have a great day.